Good morning, folks, and welcome to the pre-market insight for February 10th, 2020. Same old news, different reaction. Let's go. On Friday's pre-market insight, we began talking about the fact that given the dull open that we had and this developing range here from 33.57 to a low of around 33.14, we surmised that it was probably going to be a dull session where we simply bounced around in between 33.45 and 33.20, about 15 points to the upside, 15 points to the downside from where we opened on Friday. And that indeed turned out exactly to be what happened. So for today's session, we're opening up right within the range that we were in on Friday, and so we're going to be bringing forward Friday's ranges to take a closer look at what we need to be paying attention to today. So to the upside, you can see we have clear developing structure here at around 33.40, and that would be the real test of any incoming strength and demand on the ES, whilst certainly very close by at around 33.12 or so might be the first test for any downside momentum to start picking up. A break of that can very easily see 3300 and even 3291 in a jiffy, given we've had this large and very quick advance from the prior week's lows all the way back to the top of the range and to make a new high. We began talking about the fact that could this be because of how this ES looks on the monthly? Could this be the start of another 2017 like leg where we had literally 12 straight months up, 11 straight months up in a row, which is very atypical. But given the fact that we had a broadening wedge formation for the last 2 years, essentially range bound, last year all we did was regain the losses that we made in 2018. So this breakout here at the beginning of the year is essentially a multi-month breakout. Sorry, not at the beginning of the year. This breakout here in October is leading to a multi-month breakout. We have what looks to be a hanging man candle here, which speaks of selling coming in at highs, yet we have a bullish, very bullish bar thus far to follow up to it. So prospectively, are we seeing another leg about to take place to the upside, seeing that we've broken last month's high and made a new high at 33.57? Or was this candle the sign of things to come in terms of institutions distributing or selling, taking advantage of higher prices and selling into strength? And this candle and possibly the next one are just going to be ones that are holding the market up for a bit, setting up another sell to the downside. We do not know, but for the time being, we can and definitely will be paying attention to the developing ranges. And thus far, I believe the first test is definitely going to become today between 32.40 and 32.45 to the upside. If we do break that convincingly, then I see no issue with us retesting the high at 33.57, making possibly a wrong number touch today at 33.60. And to the downside, if we do break below 33.19, very quickly we can see 33.12 and a retest of 3300. Be safe out there today, guys. Keep it simple, smarty.